The only people who get it are the people who get it. And welcome back to Understanding Regulation W. In Module 2, we're diving deeper into the heart of the financial regulation. We'll explore the scope and applicability of Regulation W, helping you understand where it applies and why it matters. Understanding the scope and applicability is essential. So, let's jump right in. In Lesson 2.1, we'll shine a spotlight on covered transactions. These are the financial dealings that fall under the regulatory umbrella of Regulation W. And understanding them is critical for maintaining the stability of our financial system. Covered transactions encompass a wide range of financial transactions between a bank and its affiliates. These include loans, credit extensions, guarantees, security transactions, and more. But why are these transactions covered, and why does it even matter? Covered transactions matter because they impact the financial stability of the bank and the broader financial sector. When a bank extends credit to its affiliates or engages in these covered transactions, there's a potential risk involved. If these transactions are not appropriately regulated, they could lead to financial instability, as we've seen in the past crises. Now, let's delve into the complexities of identifying covered and exempted transactions, because not everything falls within the scope of Regulation W, and distinguishing between them is crucial. Identifying covered transactions is vital because it ensures that these potential risky transactions are subject to the rules and oversight mandated by Regulation W. This oversight is in place to prevent financial institutions from engaging in practices that could lead to instability, as we witnessed in previous financial crises. Exempted transactions, on the other hand, are those that Regulation W deems less risky, or those that are already subject to other regulatory frameworks. These exemptions exist to strike a balance between necessary oversight and flexibility in certain financial dealings. Understanding these distinctions helps financial professionals navigate the regulatory landscape effectively. In Lesson 2.2, we'll shift our focus to the entities affected by Regulation W. Who is bound by its rules, and what are the roles and responsibilities of these entities? Understanding this is crucial to ensure compliance and maintain a stable financial environment. First, let's provide a detailed overview of financial institutions that Regulation W applies to. These institutions include commercial banks, savings associations, trust companies, and credit unions. These institutions are the backbone of our financial system. Why is understanding the role of financial institutions so important? These institutions are responsible for safeguarding our money, facilitating economic growth through lending, and providing a wide range of financial services. When these institutions engage in transactions with their affiliates, there's a potential impact on their financial health and, by extension, the broader economy. Regulation W ensures that these interactions are conducted in a way that doesn't jeopardize the stability of these institutions, which is vital for the financial well-being of individuals and businesses. Next, let's delve into the roles and responsibilities of affected entities. Understanding these roles is essential because it ensures that everyone involved in the financial transactions governed by Regulation W understands their obligations. For banks and financial institutions, this means adhering to the rules and limitations set by Regulation W when engaging in covered transactions with affiliates. By doing so, they help maintain the stability and integrity of the financial sector. For affiliates, it's important to be aware of these regulations as well, especially if they have a financial relationship with a bank. They must cooperate and provide necessary information to ensure that the bank's compliance efforts are successful. Compliance officers and regulators play a pivotal role in overseeing and enforcing Regulation W. They ensure that banks and their affiliates follow the rules to mitigate risks and maintain financial stability. As we wrap up Model 2, you will have a firm grasp of the scope and applicability of Regulation W. It's not just about rules, it's about safeguarding our financial world and ensuring transparency and trust. Don't forget to give the video a thumbs up if you found it valuable. And be sure to subscribe to our more in-depth exploration of financial regulations. In Model 3, we'll take a closer look at the restrictions and limits set by Regulation W. Thanks for joining us on this educational journey. Your understanding of Regulation W is the key to a safer and a more transparent financial world. Thanks for watching.